Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is Monday, and the entire Northeast is just getting buried in snow, is my understanding. Anyways, I'm having a little bit of technical issues, so I'm sorry I'm a little bit late. Just like everything is going wrong this morning for me so far. Your Ninja Trader won't start. But we can kind of look at some of the pre-market numbers coming out of Fidelity here. Now, I understand a lot of people made new Fidelity accounts this weekend, so that's good. But the thing that sticks out to me the most is look at silver up 40%. AG, so how I'm looking at it, up 40%. So it's looking good for our silver trade. I didn't think that it would pick up so crazy so quickly, but hey. All right. I do not know what the... Oh. Wait a second. I got... it's you see, I don't know what the deal is with it. Look, it's like, it doesn't like the window. If I try and shut it down, close window, you want to save workspace? Nothing. No. Okay. And now it closes down properly. But when you actually go into it, it doesn't let you do anything. You did that one too, AG? Yeah, well, you know, when I was reading through it, everybody's like, no, don't do silver. The good guys have silver. And it's like, well, like the whole market's going to go up together, guys. But AG was the one that people were recommending that, or there was like a physical silver trust, whatever. I don't know. The AG thing, let's fix our Ninja Trader software first. And then we'll try figuring that out. It must be something to do with like the strategies are like not unable. Oh, that means that Ninja Trader is still running. Ninja. Yep, process in the background is still going. Is that what's wrong? That one plugin? Okay, so what's your take on GME and pre-market volume? Well, so it just looks to be going sideways to me the moment. So let's just come in here really quickly and see if it'll show us. Okay. Interesting. So can you see there's a bit of volume has been accumulating here at 320, then there's at 100. So a lot of technical chartists will say that when you've got a lot of volume at a particular area, that is a indication of agreement or balance or something along those lines. Well, I don't necessarily see it that way. I see it as that they are just stuck there. I don't think that they want to trade at 320. I think that just happens to be where it gets stuck because there's kind of like a little liquidity hole there. And so we want to see them break away from this area here, right? But it's going sideways. That kind of... So there's an issue here. Oh, you need to change this. Okay, so here, can you see how there's like a change in the profile there? Ba-dum. So obviously way down here from like going like way back. But then there was a ton of volume since that rise up around here, okay? So what I'm seeing is that this is a market that all of the liquidity has been taken out of it. So like a lot of people are worried about GME. They say, they screwed it up. I mean, of course, there was squeezing. So that was one thing, sure. But like, is it just going to absolutely drop from here? No, because the thing is how do the shorts cover when there's no volume trading, right? Having 170 million shares trading a day is really good for the shorts trying to cover. When it's only 50 million, that is like equal to the entire size of their shorts. That's not good. That it makes it harder for them to get out. And so what you have right now is like a ceasefire, right? But it's around 320. So if it were to move up, significantly, I mean, it comes back that would be one thing, because there's plenty of people that would be just coming in and buying. But if it moves up, maybe let's say above 350, then I think you could get, another bit of squeezing and like really bullish action when you consider that there's still a lot of market participants that want to participate. They can't even get in, right? So that's kind of how I'm reading that right now. Let's try NinjaTrader again. Now, it's interesting to me that AMC is up 20%, but GME is pretty much where it was. They did open up higher over the weekend, but came back quickly. The word is to wait for the cover from Friday's expiration at today's open, which doesn't make sense to me. I thought the pin at 320.5 on Friday was because of the covering explanation. Okay, so that's wrong. When the options expire, that settlement and everything of that nature happens at the close on Friday. So they already closed the options, okay? And nothing all that special happens today at the open. But what you will see this week is that market makers are going to try and balance their books. So the market makers actually ended up being short themselves, was my understanding. When you looked at the put-call ratio, there was way more puts than there was calls. So the market makers were probably actually going short themselves a little bit. So they're going to want to get out of that as soon as possible. And so that's where people have been saying that this week you will get a gamma squeeze. Now, I have definitely seen that happen before in an asset, but I wouldn't say it's guaranteed. In this case, I think it could happen, but overall, I just don't think that the trade is done. Now, another thing is that there's this whole thing about shorts covering and stuff like that. The data that we get on that isn't very reliable. So see, I can get the window to show up, but I can't. I'm not quite sure what I've got to do. Maybe I've just got to delete this underscore workspaces tab. I tell you what, I love NinjaTrader, but every once in a while. All right. It's okay, I can delete these because they'll come back. I could try deleting the database too. And the cache. Well, if I delete the cache, I'll be a sad face. That's some data. Yeah. Deleted. I can always restore it. Wow. Is getting big, 34 gigabytes. No interest at 6B. Are we talking about that British pound? Wow. Okay. Maybe NinjaTrader was just crapping out because the database got too big. Because it is. I am deleting, like, it's still going and it's at 60 gigabytes. Good thing Jigsaw is so great. Move that out of the way. Futures rebound from early rout despite continued surge in most shorted stocks. It will be very, I think that we're going to want to monitor very closely if when GME moves up, if we see selling in equities. In the equity futures. Because there may be some issues where, how do I put this? Some of that stuff about the stocks coming in off and everything might have been exacerbated by it being the end of the month, basically. That's what I'm thinking. By the way, let me turn on my little robot thing here so that I can see your messages a little more easily. Yeah, because HFs will be liquidating to cover. Yeah, and on the gamma squeeze thing. If the market makers were net short because of gamma, then they would be looking to cover that today because they can't cover it at the close on Friday, right? So they hold it over the weekend and then the next week they get rid of it. So I've seen this on the S&P 500. In fact, in the video that I'm releasing today, I tried to release it yesterday, but there was like an audio issue, so I took it down and redid it. But there's been some weeks in the S&P 500 where there was like significant long gamma going into that Friday expiration. And then when all of that gamma came off, you saw the equity indexes sell a little bit the next week. Hello, Marlon. How are you? I am not actually doing all that great, to be honest with you. I am having platform issues. Okay. SPX futures went up 100 days from the lows. What the hell? Yeah, it's they're pretty good. I mean, there's a lot going on around the world too, just besides the GME thing. There's all this stuff about, the virus and interest rates and stuff. Oh, by the way, what do we got for the VIX? 31.26 VIX down. Anthony Crudelli just tweeting here. The market loves to reward people for bad decision making just long enough for you to feel comfortable about making those bad decisions. And then the market has an amazing ability of letting you give it all back and then some. Well, yeah. But you know why that happens, right? We understand why that happens now. It's because of the square root law of market impact. So if a group of people buy into something and they will have a market impact and move it up, and then when they take their profits on that trade, it will go down and it will go past where they originally bought it at, barring any other kind of catalyst to move it up and bring other people in. So if you made a bad decision, that means that you're the only ones that bought it, and then nobody else comes in behind you, and then you're going to dump it, and you're going to lose money on that trade. And depending on where you got in on that move, some will give away more than others. Oh, come on. Good video this weekend, Seth. I really like that. Yeah, thank you. Yeah, so if you guys go to the channel right now, you won't see it, but it will be there at the market open. It is called Trading the News. So apparently, I figured out what the issue was because people were in the comments were saying, "Oh, I can't hear the audio." Well, apparently, what happened is when I did the audio, the microphone that I recorded it with is mono. So I to bring the audio into the video project, I just like copied the channel. Well, since it's dual mono coming out, when you use something like your phone or a speaker and it's a mono, so it tries to play it mono, it combines the left and right channels together and then spits it out that way. And if you combine the left and right channels together, that basically everything cancels out. And so then when you listen to it, it sounds like garbled and like nothing happens. So that is what was going on there. So I went back and I fixed it and just told it to use the mono signal. It still converts it to duo, but then the DaVinci software automatically copies it and inverses the polarity of the other one so that when you combine them together, they don't cancel out. Hey, yeah, that's a bit better. Okay, close. You want to save workspace? Nothing. Yes. Better. Okay, so a cache clean did it. So now I'm just going to come in and recover my workspaces. Pull up the one that it saved the other day here for workspaces here. Rename it. Change the title to How to Trade in a Blender. Why would I do that? So something I've learned about YouTube is that the title is the way that you get people to find you in search, and the thumbnail is how you like attract people to it. So we need to have the title to be the things that people are going to search for, right? Okay. Inventory 3. And hopefully all of the strategies are still there when I do this. And hopefully this workspace is not what is breaking it. Hey, we're good. I think we're good. It's loading. It's loading everything. The news is a blender, so a thumbnail will suffice. There you go. People will definitely search for GME AG. Maybe I should change it in here and put in hashtag silver, because that's the big mover today. Hold on a second, it blow my nose and stuff here. So like when I blew my nose, I felt air come out through my eye. What the hell? That was not normal. Kind of tickled. I've been here for a week about now. What are the robots you talked about? I know they have names and you're training them. Could you elaborate on what they can do? No, I can't. That's exactly why. They have code names. Where are they? Oh, they didn't get added. Oh, no. Wait. This is close nothing. Yes. Sucks. That sucks. That sucks. That sucks. Okay. New strategy. So I've got them all in here. We'll start with J. He needs tick replay. We run him on a 1 range chart. And we only need 3 days to load. And we always want to use the set trading hours on all these. But they do trades automatically. I didn't realize it was even possible. Well, how do you think that all of the high frequency trading firms are doing it? Okay, and this J will be the same thing, but he will be doing ES. He will be on a 1 range chart. Tick replay. STH. Oh, did I turn on tick replay on this, by the way? Yes, it did. Okay. Then let's move from the bottom up. So we'll do Squire. I think that Squire is fine. We just have to do the STH. Yeah. 1 minute. New strategy. Oh, you know what else? Is it these strategies right here? I put them on a different account. They're gonna trade. Oh, I deleted it. Oh, I see. Is it easier to execute a futures trade or an equities trade with a lot of money? That is a very complicated thing to answer. Hold on a second. I'm just gonna disconnect and reconnect this here. Okay. So generally speaking, futures have a lot more liquidity. So yeah, you can execute a trade very quickly over in the futures a lot faster. But like there's an upper limit on that too. So like I can't go out and buy like, 30% of the S&P 500 futures. That would be like a disaster. But I can go and I can buy a significant portion of a particular company, right? And so those are kind of your limits, if that makes sense. Now, for like, if you're just a retail trader, all right, and you're getting, you're building your account up and you want to take a trade on news, then you almost certainly want to use the futures because you're going to have better liquidity over there. The futures can come over here and can handle you buying 100, 1,000 contracts all at once, but most equities can't. Most equities, you've got to be a lot more sly about it. And you can see that in how they, just like the spread and everything else. Okay, that's right. Square. Yeah, okay. Those two don't need tick replay, but Indy and Brandon do. So am I gonna have my if I come over here and look at the strategy analyzer, because I don't remember what kind of a chart I was running. I think it was a 1 minute. Oh, okay, cool. So Indy EFGHI was it okay. No, that's not what I called it, though. I don't remember what it was called. Oh, that's right. Basically, it doesn't matter what I load on it because it loads the correct price series underneath of it anyways. Okay, so we'll just come in here and do... I'll do it as 1 tick. One tick is the most granular you can make it. STH. Okay. Turn them all on. What trades am I making today? I don't know. So I don't think I'm going to do anything with my longer term equity positions in silver or GME. We'll look at the equity futures. Man, I'm still a little like weirded out by my blew my nose and like I could feel pressure on my eye and like air coming out my eye, and that's never happened before. Okay, so now that we've done all of that, I'm just gonna move him back over here. Oh, we can close the task manager. Positions window. Okay. So let's come in and look at our chart here. And we're going to need to duplicate this in a new tab and do this one should be SI. Use water mixed with salt. Well, the funny thing is that when I just cleared my nose out there and everything, it was like there was nothing in there. I don't know. I don't know what the deal is. Oh my. Okay. Okay, so I see. So here on the chart, going back to the E-mini, yeah, pretty significant rise overnight. And keep in mind that there's still kind of this bit of profile here around the 3760 area that I think we should keep an eye on. It's really more 3770, isn't it? But, you know, above yesterday's high? Sure. Where we are right now, that still kind of just looks like rebalancing. Like think of it this way. You got all of these guys, they are selling. Why would anybody else sell? They're selling to rebalance their portfolios because their strategy necessitates it when they lose money on their shorts. Nobody else, everybody else I think is still bullish. And so to me, it makes sense that you'd get selling because of them there, and then afterwards, you'd have the short-term regime change. So that's what that looks like to me. Coming in here in the Treasury was actually a little bit volatile yesterday because they were selling it hard, but then, the risk trade came in and they moved up. So now we are about where they were when they moved up here in the Treasuries. But that is kind of, I don't know. That's a little bit above this range that we've got in here. So I think we should keep an eye on that one. Oil continues to trade in a range, even though, well, I guess some of the analysts at Goldman have kind of moderated their stance on oil overall, but they're still positive on it. So then we get into the metals. So gold, well, that can't be right, is it? I'm going to make sure. Oh, yes. See, I need to roll it over. I was like, I'm pretty sure that that's not right. Okay, well, I guess maybe it is. Because is this February? It's not giving me February 1st. It is on the April contract, though, so I don't know. And it is updating live, so I guess that is correct. So anyways, so gold is up a little bit, but silver is up big time. Holy moly, silver's up. Good grief. I'm just a little surprised at how different the two charts look like. But silver has gone now in the past few days from like $25 an ounce to $30 an ounce. Now remember, the all-time high is 50. All right, and it's touched that twice. Copper is actually still kind of struggling. So you're getting like these up moves and then they come back. I think this is cyclical because of the differences between China, Europe, and the US. All right. Daily ES, by the way, they did touch the 50-day moving average. We should keep an eye on that. So right now it's at 37.20 or so. Well, 37.17. So I'm just going to make a note there in here. 50 SMA. Okay, so let's talk about silver. So here's the thing. Reddit has been saying we should pump silver. Their theory is that silver is supposedly the most manipulated commodity on the planet. I've always heard that. Everybody always tells me that ever since I've been trading futures. And I remember I was there. In fact, probably the best trade I ever made, although this was all on a spreadsheet back then because they wouldn't let me trade live, they wouldn't let me get my hands on accounts when I worked for Goldman. So I would watch the markets on a chart and I would just put my entries and exits in a spreadsheet. It was a cool spreadsheet, by the way. At least I was proud of the spreadsheet. And so that was this move. Gold was going, and then they were like, well, gold is kind of already gone, so maybe we should get into silver. And so they got into silver, and they got it up to $50, and then it immediately turned around. They increased the margins on silver, and it immediately turned back around, all right? So that's kind of the way that silver tends to go. The previous time that it hit 50, somebody actually straight up decided to try and corner the silver market. And they were prosecuted for it. But the reason that their trade didn't work out and they eventually lost money on it was here again, it got to 50 and then the margin requirements were increased. And so they had to sell some of it. And then, it just is kind of like a cascading effect. So I tell you what, if you're going to do something like that, make sure that you give yourself plenty of extra margin because as it goes up, it always changes. They always change the margin. They did it here in GME, right? Like if people weren't trading on as much margin, I think it would have been different. I really do. I think it would have been different. I don't think that if you take all of the options trading out of it, maybe they wouldn't have had to shut down GME. Of course, I could be wrong, but that's the way it goes. Okay, so anyways, so Reddit wants to pump silver. Well, here's the thing. Like the the overall outlook for the metals complex was already looking pretty good. Okay, and you got to remember that these commodities are run by commodity trading advisors, and that those strategies are almost basically entirely momentum. They get into a contract and they just try and ride it the whole way. Okay, so I think here in silver, I think that you already had a good base. Like when we come back over here, I had been watching it. I was like, wow, like, you know, I kind of want to get involved in the metals just because, you know, they've been moving up, consolidating, and I'm thinking, yeah, I think they're going to keep going, even though there was like this big drop right here. It's like that's kind of what happens, is that like something big will happen, and you think that the metal should go up, and they don't, because there's like margin calls is what happens, and then it goes up. So I'm thinking, you know, overall the time is right. People are concerned about inflation. The metals are probably going to be moving, right? And then Reddit comes in and it has this whole thing about silver. Now, don't get me wrong. They say a lot of stuff on Reddit that I don't believe. Let's just say that I don't believe. I'm not going to say that I am an expert on the silver market. Okay. They say that the silver market is like the most manipulated commodity in the world. Okay, maybe. Or maybe they just, you know, trade it. And sometimes they're long it and sometimes they're short it. The one that I hear all the time is they're like, yeah, they don't want silver to go up because it's a competitor to the banking system. And if we pump up silver, then the entire market is going to collapse. And I see all these people coming in and they'll be like, no, guys, you don't want to do this. It will ruin everything. It's not worth it. Yeah, I don't believe it. I don't believe you. I straight up don't believe you. Actually, I think that what you're doing has the opposite effect that is intended. The reason that we moved to a fiat money system based on debt was because countries and market manipulators were manipulating the prices of gold and silver, and it resulted in recessions. This happened many, many times in the early 1800s, when there wasn't a central bank. This whole time period between Jackson and like the creation of the Federal Reserve was accompanied by financial crises the size of the 2008 crisis, like every 5 years, because of things like gold. And it would be like, Japan would come out and be like, well, we want to mess with the world economy. We're going to sell all of our gold. And then the price of gold plummets and your currency is based off of that. And it's really, really bad. Okay. So I come over here, I'm in a fiat money system, and I see the price of silver going up, and I'm thinking, oh yeah, I'm sure, you know, I really hate being on a fiat money system now. No, you're thinking, wow, well, people can really manipulate it. Can you imagine if the entire economy was based on that and it was moving up, what that would do to us? Yeah, so that's the thing. But people believe it. And it's more than just Wall Street bets here, too. Like, I saw a video. Where did I see it? I think somebody was like reposting the video on TikTok. Alex Jones supporting this silver thing. So you've got like all of the right wingers and the conspiracy theorists and the people that think that, you know, there's always a significant number of people out there that think that we should be on the gold standard. I don't think that we realize how many people out there actually believe this idea, even though it's totally nonsense from everything that we know about economics. So that's where I'm like, this could have legs. This could have legs no matter what happens, simply because of that dynamic. Now, people will come in and they will say, well, you don't want to buy silver up because the shorts have positions in that. Well, look, it's very rare that you're going to find a situation like GME where Citadel is not involved. You know what I mean? Okay, in Citadel in GME, you can go long it, and it appears that those hedge funds in Citadel are basically short, and so yeah, bumping GME up kind of hurts the Citadel and these other guys. You're not going to find another situation like that anywhere. You're really not. So this whole idea that like you can't pump you don't want any other asset to go up because of Citadel is like, then you're not going to be able to make any other trades, guys. You know what I mean? And the battle over this on Reddit is quite interesting. So there was a thread that was quite heavily upvoted talking about it. But then when you go and you read the comments, like there's a lot of disagreement over it, right? A lot of them are like, yeah, it's not really a significant thing to them though. And things like that. So where it goes, I don't know. It looks to me, though, like despite the best efforts of some people on Reddit who are concerned about their GME trades, and that's another thing that I got to say is that there are a lot of people in GME that seem nervous. I think that they're nervous because they have misunderstandings about what causes prices and volume to move. Okay. They think that it's selling, that people sold it into it, or it's some sort of short ladder attack. But we know when we look at this that they took all of the volume out. So you have a fundamental problem with this going anywhere because the volume is gone until it comes back, and it will come back, I'm sure. So but then there's other people that apparently are in the silver thing and have been in the silver thing, and there's people that have been pushing silver on, talking about silver on Wall Street bets for a very long time also. So it looks like despite their best efforts to kind of suppress it, that the silver thing is not going away. And the proof is in the pudding here this morning, where silver is up like 40%. And it's not just that like people are buying it, like these people went out and bought like all the physical silver that they could. So these guys over in the futures market are like freaking out because they've got all of this silver that people want to deliver and they can't get enough of it quickly enough. So I think that just that dynamic alone means that silver could continue here for a bit. And I think that you probably are going to get a significant portion of people on the public to get in, and even at some point I think you get CTAs to come in. So the only question in my mind is, how far does it go? Well, we're at 30 right now, so just that we're at 30 now, like I think that 50 is quite likely. So you get what I mean? Like there's this whole idea, like people think that it's just all about pumping it. They think, oh, the reason that the big guys make so much money is because they come in and they buy something, and then when they buy something, they move it up, and as they move it up, all the retail traders jump on the momentum, and that moves it up even more, and then they can just sell into those guys, and they make the money on that. No, wrong. Every trade has an impact, and if a big guy gets in, he will have an impact when he gets in, and he will have an impact when he gets out, and that impact when he gets out will be against some momentum and will have a greater effect, and the net impact of the trade will be that they lose money. Like the people jumping on with it, it doesn't make up for it because people jump on when they're selling it too, right? The only way that they make money is if there's some other catalyst. Like there's a reason for the value of silver to actually increase beyond just them getting into it, right? And it's the same thing with you retail traders, is if all retail is getting into this, and we can consider this one huge meta order, if something doesn't come in along afterwards to actually make the price of silver actually be worth more, then you're not going to get anything. Now, a short squeeze is one of those things that could do it. Is there a lot of shorts in silver? I don't know. I haven't seen any data from people saying that there's like actually a lot of shorts. It's just like a bunch of conspiracy theories saying that JP Morgan manipulates the price of it. So I don't really know on that one. But I do think that the overall fundamentals and chart and everything looked good before they got into it. And so that's why I decided to jump on that trade. How long do you think this Wall Street bets train is going to go on for? It seems that it is affecting the entire market and obviously acting irregularly. Well, so first of all, I think that you're seeing a bubble get popped here. And when I say the bubble get popped here, the bubble that I'm talking about is the short bubble. There are some names that were shorted, that were overshorted and undervalued. And these hedge funds had positions on them that were way too large. And they were using those positions to fund other positions elsewhere. Oh, Kaka, thank you very much again. Big Twitter user said, we're going to see flash crash, but the index is green. Yeah, I don't see any reason for it to crash, but anyways, man, I totally lost my train of thought there. Why is gold nonsense? Well, I'm just saying the idea that pumping up gold and silver will impact or crash the entire monetary system is nonsense. The monetary system moved away from gold and silver exactly for this reason. And so a big bubble coming along just makes them more confident about their decision to move over to a fiat money system. That's all I'm saying. Okay, anyways, so the shorts, they're in a bubble, and now they're being forced to cover, and so that bubble is being popped. And it's just that because it was a short bubble instead of a long bubble, you get in this weird dynamic with it, right? Right? So the Wall Street bets thing was really just something that was inevitably going to happen. This bubble was always going to pop, and there's no way that it was going to pop without the Wall Street bets guys seeing it, especially since you've got people like Raging Kitty that are really like deep value YOLO players, right? So of course they were going to pick up on it. Now you've kind of got a new dynamic created because now everybody's watching Wall Street bets, right? And so I was trying to share this on my TikTok. So if you guys don't, if you viewed TikTok and you haven't found me on TikTok, go and find Speculator Seth on TikTok. And I've been trying to put some tips out on the weekend about things that I'm seeing people say on TikTok, and I try and gently correct them. I don't like gaps. I think we consolidate in range and ES. Okay. So the best trade is usually the first trade. Remember that, okay? Why is that? Because the first trade, that's like the move that you're looking for, okay? Nobody else is looking for it. You think that something is going to happen, and then you get that first initial big move, and that's usually the biggest, best trade and the best place to get in, and that's where you got a nice, easy spot to get in from. You can hold it all day or whatever, and you can pick whatever exit you can, and it's just a matter of like, do you get out too early or too late or whatever the deal is, right? But that is the best trade, and if you miss that trade, and then you try getting in after that, then you are in the mess. You are in everybody sees it, and the volume is increased, and it's whipping around all over the place, and it's hard to catch a good spot, right? Why does that happen? Because the edge has already been exploited and the public knows about it at that point. So it's no longer an edge because everybody knows about it, right? You have successfully removed that edge from the market by trading it. So it's going to be the same thing here with Wall Street bets, is that everybody thinks that this is the trade now. Find whatever mover is going to be going on Wall Street bets and then buy it on the open and hope that it carries you. And it's going to stop working because so many people realize what is going on. Everybody's aware of it now. And not everything is going to have this same dynamic that GameStop and silver do. GameStop with the shorts and silver just because of the cultural implications around silver, right? Anything else, you're going to pump it up. It's not going to go anywhere. You're going to sell, and some of you guys are going to lose money. And the only way that you're going to make money off of that sort of a thing is if you are like the early. If you can kind of predict what's the next one that Reddit is going to go after and get into it before people really start posting about it and it pumps, right? People push too hard for the government to intervene, and the government is going to protect you by making it so you can't trade. It's a big club, and we ain't in it. The SEC gets involved, they will make more barriers to entry for retail. Well, I don't know about that. The thing here is that, like, once again, as I stated earlier, Wall Street bets have an opinion about how the market moves that is just dead wrong, right? And eventually it will catch up to them. So I don't think that they really need to do anything. And from the perspective of pretty much every business in the market, okay, having a ton of retail traders out there being involved in the market is a good thing. They make money off of all you guys trading. Some of these people, I bet you that Citadel made a bundle off of everybody trading a GME, you know? So they're totally okay with it, right? It was just this issue with the VAR shock, where the positions that were on were so large that the brokers like couldn't cover them at the clearinghouse. So once that logjam clears up, of course, they're going to have to do something about it. They're going to have to change something. But I think that the change something is going to be will require people to hold more margin, more collateral, which means less margin overall, I guess. When do you think what conditions need to be met for GME to finally pop? Well, so yeah, again, the low volume on Friday, they traded like 50,000 shares. And the last data that we have on the number of short shares outstanding is 62, right? So it's really, really hard to take off a position of that size when there's like no trade in it. So you would think like, the shorts must be trying to do everything they can to cover before the retail traders get back. Well, sure they are, but like their ability to actually cover a whole lot of it right now is not very good. So I think that this saga will just continue all week, and I don't know if it's going to pop or what. I don't think that the retail crowd is going to sell. I think they're going to hold it, and that they want like 1,000, 1,500, something like that. Would you sell all of Deep Value's GME positions if you were him right now? Oh, well, absolutely not. So like you want to sell into it when it's having strength. If it was moving up, then I would take sequential profits along the way. But you don't, like here again, it's kind of going dead. And then you sell, a $3 million position, you're going to have an impact on the market that's not going to be positive for you. 22 million on a brick and mortar retailer. Yeah, I'm out after I recover from my heart attack. Someone was wondering, and he has already taken some profits. He clearly understands. It seems to me that he is smart enough to understand his impact on the market, even if he doesn't necessarily use the formulas and everything that they do to completely optimize it. I pray for no added measures against futures trading. I don't think that us in futures will be affected by it. Maybe someday Wall Street bets will key on to the futures trading, and they'll all be on the futures, and they'll start doing it in futures, and then we'll have a real fun. But I don't think so. I have to say, like, focusing so much on futures and then being kind of forced by the market dynamics to pay more attention to the stock market, I really feel that the futures market is a more difficult game, is how I would put it. Like, it's just such pure trading, and the amount of information that you have is so small compared to the overall dynamic. And so your ability to have an advantage over the rest of the market is really hard, because the people that you're up against are really sophisticated. Whereas in equities, there's so much noise and nonsense going on anyways that you just have to have a good trade thesis. No need to add rules, maybe only for Bitcoin futures, yeah. Now, interestingly enough, there have a lot of people have been also saying that Bitcoin has a lot of shorts on it, which actually doesn't surprise me because it really looks to me like Bitcoin has had a reversal of sorts, or at least a short-term momentum stop. Should we call it? Like, it's changed. Are you going to be trading GME silver futures today or sticking to ES? Oh, so if I take any live trades for you guys, it will be in ES. But, you know, we'll kind of look. The issue is that on Monday, well, so hold on. We got to come over here. I didn't really check here. Okay, so we've got a market manufacturing and ISM manufacturing numbers. Construction spending at 10. So Monday and Fridays tend to be my worst days on futures. Okay. Friday is kind of hard because the order flow is a little bit deceptive because people are trying to close out positions for the weekend. Monday is difficult because there's not as much news, and there often just aren't catalysts to trade on Monday. Because usually what happens is they come in over the long weekend, they say, okay, hey, I got an idea for a trade. We should do this. We should buy silver. And so they go, oh, okay, let's buy. And so then they have to go and they say, okay, how much are we going to buy? And what's the schedule going to be? And we need to talk to all these people that are maybe going to buy it from us and yada, yada, yada. Okay, so that takes a little bit of time. So what happens is they do all the planning on Monday, and then they do all the legwork on Tuesday, and then they don't end up executing it until Wednesday. And that's why I believe, at least, that you often don't see very much activity on Mondays, but Wednesdays tend to be some of the highest volume days of the week. On average, Wednesday is the highest volume day of the week, okay? So that means that I'm less likely to take a trade here on a Monday. And if I do take a trade, I'm going to wait for there to be, you know, a little bit more movement, because right now we've only moved 2 or 3 points since we've started this stream, and it's pretty slow and quiet right now. So I certainly, if I'm going to take one, I'm going to wait maybe at the open, maybe after the manufacturing numbers. And that's another thing, is that trading is going to be somewhat constrained until the manufacturing numbers, because there's going to be some people, maybe they want to buy a manufacturing company, right? Well, do you want to buy it right in front of a report? Not necessarily, right? So that's a key thing that I'm kind of holding back on right now. Why are you long Dow? Well, I'm not long Dow. So all of these numbers right here, this is just a watch list. These aren't my positions. Did you read the hilarious thread on Wall Street Bets about the guy who invested in ornamental gourd futures? And no. Did he like YOLO into that one? Did the subreddit go down again? Somebody asking me that last night? I don't think so. I could see it today. Funeral says, no, you were invested in Dow. Why not gold now? Well, so I think that gold would be fine, but the momentum is in the silver, so I did the silver. Yeah, it's not down. Yeah, it's just fine. There's no silver short squeeze happening, none never. There's so much about this. It's not going to get into the hundreds. See, I was thinking about it. I was like, well, I think that 50 could happen. Could they break the all-time high? It could if it became like a thing. Blah, 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 blah. But these guys that are concerned about the silver are basically believe that people buying into silver hurts their chances in GME. And I don't think that that's the case. I really feel that in GME that the buyers have basically already won, and that all they have to do is just hold their contracts, and at some point these big guys are going to have to buy it on to them, and it'll move it up. No, you said your 401k was in, well, it's in the S&P 500. Why not gold? Why would I put my life's savings into gold instead of the S&P 500 when the S&P 500 has a consistent return of around 7 to 10% over the last 30 years, and gold's history and during that time is quite spotty? Yeah, you'll get years where gold will be like 20, 30%, but then you have other years where it's down. Gold is not a consistent enough of a return for me to be putting my, money that I don't plan on touching for 30 or 40 years into gold. Not to mention that you're usually, for most managers, the things like commodities and metals aren't available for your 401k either. I don't know if mine that is the case or not. Do you believe it's possible that HF's counterfeit shares, or you mean high frequencies counterfeit shares? So I've seen the threads on that. I don't see any proof, and so I'm just agnostic about it. Apparently, Burry tried to recall his GME shares, and it took his broker weeks, I bet. Oh, hedge funds. Yeah, I see this whole theory that like they've counterfeited shares and that it's like equal to like 100% of the shares out there. I don't really see any evidence of that. That is a conspiracy theory that with not enough sufficient evidence for me to be factoring that into my trading. Everyone is talking about the stock market. Is not that a sign of a bubble? Maybe. A global index fund? I don't know. The historical number is that you're best going into the S&P 500. I wouldn't put it all into the S&P 500. So I have most of it in the S&P 500, and then I have a little bit of it in global growth names, and then I have a little bit of it in bonds. So when we move down, my bonds do well, and so that kind of stems the losses. And then when we're going well, my global growth and smaller equities do well, and so that makes up for the bonds lagging. And right now in the regime that we're in, bonds might not necessarily move up, but they don't really go down either. So it ends up being really positive. And my understanding is from looking at my statements is that I outperformed the S&P 500 because of my mix last year. So that's how I do it. Don't you think that the S&P is overvalued? I mean, there's a lot of people that argue about that. I certainly think that the PE multiples look bad, but there's a lot of things that can change on that, right? You gotta understand that things like, especially like price earnings ratios, are like moving targets, right? There's like data underneath there that's constantly changing. And so what it looks like now, and then you could wait a year from now and all those numbers will be different, and then maybe those PE ratios look more reasonable. I understand what you mean by counterfeit shares. They're saying that they're selling shares to people that literally don't exist. They just claim that they had them, but they don't actually have them. But there's no proof of that. I can give you 4 more years. I mean, I've been running that. I've been running that mix now for like 6-8 years. It's done well for me. I think it's funny that, like, I don't know. I just can't imagine you going in and putting your whole 401k into gold. just seems a little crazy to me, to be honest with you, dude. I don't think that there's a single I'm not a financial advisor, but I'm pretty sure that most financial advisors would tell you that putting your 401k into gold, the whole thing into gold, is probably not a wise move. That said, I think that gold and silver probably have some more juice in them. Got 2 minutes. I should pull this out and make sure that I've got good. Okay. It is another conspiracy theory without proof, but we retail guys operate in space with limited information, so maybe it is a smoking gun, maybe it is not. Well, there's one thing about working on limited information, but like, think about if that's true, what you have to do, and like the trade that you're making, like it's a conspiracy theory that for you to act rationally, if that was true, would put you into a very low probability trade. You know? Would you put your 401k in Bitcoin? Absolutely not. Oh, man. Certainly not here at these prices. The Jolteon in the background is so satisfying. You see, when it first got in there, it was an accident, and you guys liked it, so I decided to just keep it around. Okay, so the first initial move there is a pretty strong buy, actually. And we'll see what we get going over here in... okay, so let's make sure I've got that all right. Okay, cool. Yeah, I'm gonna be forced to buy it right there, maybe. Okay. So maybe a little pothole right there. Okay, so GME is taking a dive there now, dropping below 300 on the open. And it looks like silver maybe having some... They're pressuring it, at least, in silver. Let's do AG and put that over here. They're pressuring it. Of course, they're going to try and do some gap filling, so I'm not too sure that I'd be too concerned about that, but... It looks like that trade was bad. Not enough followers on that, so they're going to try the other side of this now. Have TweetDeck out here. Nope, that was terrible. Holy crap. Okay, so let's kind of re-strategize here. Because the deltas is flipping so hard there. Wow. 37.35. Oh, that was from a long time ago. Hmm. Bitcoin is just a bubble. Well, I have my own model that says that it's time for it to for the bull run to end. Some of it we'll see. There was other people trying to pump Bitcoin, on Friday. Although that kind of looks like that died down when Dodge took a kill. Got hit hard. It was kind of satisfying to see the wind get taken out of the Dogecoin guys' sail, because that one's so predictable. I wouldn't say everything is a bubble. We'd have to go through everything and provide hard evidence as to why it shouldn't be valued what it's being valued. Okay. Jeez. It is so messing with me today. What the heck? If I don't like it, it's a bubble. There you go. You think that AMZ has taken buying? I don't think it matters, guys. I just think that that's fundamentally the wrong way to think about a trade. Zero Hedge just tweets brokers are breaking. Does that mean that they're opening back up trading of shares of GME? Well, this is an unusually volatile open here for the S&P 500. I tell you that much. My broker is broken in. I can't get in. Well, I don't think you can trade GME with 212 anyways, right? Whew. Okay, well, GME sold on the open, but it is recovering back up. So here again, it's like, yeah, okay, sell it. Like, there's still a lot of people that have to buy it. Okay, so that time they broke out the top. And that actually looks pretty solid. I think I need to change this. This is too high. Win 25 is too big of an order. I don't see them often enough. He changed the multicolored chart rapidly changing? Oh, jeez. Oh, I played that one wrong. I can see where I made a mistake there. Well, when it starts doing this sort of a thing, it can often be an indication that they're going to sell, so... It is. Well, okay, so that was pretty good. That was a pretty aggressive sell there. You see all of those big sell orders that just came through? Could you explain the multicolor chart rapidly changing at the top of the screen? Are you just talking about my depth of market? Talking about all this? These are S&P 500 futures. Blue column are bids. Red column is red column is sells. Inside two columns are the buys and market buys and sells hitting into those. A large bid there at 37.41. Okay. So GME had that initial dip and now they've recovered it and it's looking fairly calm at the moment. There you go. There's another one. Okay, so there was a buy there at 41.50. How do you learn to have more conviction when trading? Yeah, RJ Will's got it right, developing a precise strategy that you believe in. So I think that the reason that you often don't have conviction is because the reason that you're making the trade doesn't have any empirical evidence for you to rely on. So if you have some empirical evidence that a particular thing tends to work, then it's a lot easier to try and hold on to it because you know that in the past that it's worked out. So you look at Ace, for instance, he doesn't have very much trouble following through on his strategy at all because he's been doing the same thing for years and years and years and he's made money doing it, right? But most retail traders don't really actually have something that they know has an edge, right? So that's where, that's why I do so much programming and I go through these things is to kind of show you guys that why it's so important to try and backtest your strategies, because most of the time you're going to go through and you're going to find out that it's not exactly what you thought it was. So there's been some pretty aggressive sells here through this, but they're not quite touching my target there. Forex Factory is saying you can pencil in at least $1,000 for direct checks in U.S. stimulus package. Yep, E-Trade is having problems, apparently. What's the volume on GME? Oh, you know what? Looks like my thing is a little We need to move that over to here so we can see that, right? Do that, and then layouts, save. Come on, one more tick. There we go. Okay, so now we can see, actually we're a little, it looks like that at the moment we're doing a little bit better on volume than we did on Friday. There's quite a fight going on in GME, it looks like. Stimulus checks is bullish for meme stocks, maybe. Okay. You can see them down fighting there. Shall we zoom in here a bit? So this bar, despite it being a pretty ugly down red candle, is actually an inside bar. Okay, and we got some news coming in here. Forgot. Okay, so we got 59.2 versus 59.1 on market manufacturing PMI. So good number, mostly in line. I don't see any significant positioning. So I don't think that news will influence us too much. We've still got the news at the top of the hour. Couple of that, there was some, sounded like some stops there. So just look at this over here on the side. See that magenta? That means that they sold everything that was there. They cleared that price with a large order. These orders tend to be influential. Just looking at my robots, and they're not doing too hot today. Which is about what I would expect to happen in this, because most of them are looking for pretty big targets. Oh, wow. So that was pretty aggressive. There was some buys there at 33, but now another sell. So GME green candle here. That's why I don't buy on gap up. Well, I tell you what, it was interesting, Vlad. How, I mean, I definitely fell into it. I thought that volume on the open will look really strong. Normally, that in the past, at least in the recent past. So I think that I was kind of playing off the metagame there and got defeated by the metagame, right? Because over the past 6 months, if you see a strong open like that, that turns into like a trend update, you know? But that time it did not work out. That time it ended up being a head fake. On March 1st, the CBOE plans to launch CBOE mini Russell options. Cool. And Let's see here. I've got to do a little bit of Oh, okay. That's right. So, badoosh. Right there. If we are so lucky, I will buy at the 50-day moving average, as I expect there should be some volume and support there. Okay, so a little bit of volume right there. I hope everyone bought Dogecoin. You saw that they took like a 50% hit over the weekend, yeah? Oh, you know, I keep forgetting about Apple and oh, do I not have them on here? No, yeah, I have them on here. Ah, you're right. So Tesla is up 1%, but Tesla is down about 50%. We need to get rid of this volume distribution because I find it distracting. Yeah, and remember that the numbers that we got out of Apple and Tesla on last Wednesday weren't necessarily very good, and I've noticed that their performance and their performance as it relates to the larger index has been different over the past, you know, since the earnings. Tesla is the original GME. Well, there's more to that one. I think in Tesla, people really underestimated the EV credits for sure. And that the adding it to the index was really the trade there. It's so crazy to me because I remember, like when I've been aware of the Tesla stock for a long time because I had a friend when we were playing Unreal Tournament. There was this guy that put up a ton of money for servers and did a lot of stuff. And I was like, how do you do this? Like, you must be like filthy rich. And he explained to me that he had made like millions of dollars on Tesla stock. I wonder what happened to him during all of this, because I would think that he would still own some of that. But when I first started paying attention to it, this latest round, it was like everybody hated that stock. It had been doing well, but everybody hated it now, and it was all short. And I was like, well, I think that maybe at some point you buy it. And then that was like pre-pandemic. And then the pandemic happened, and I was like, well, I don't want to buy and necessarily buy anything here. And then this latest run here started. So I've been a little bit perplexed by this latest run, because it was like, okay, yeah, there was a lot of shorts on and that should come back out. But then it's just never stopped. And like, it's crazy to me that they split the stock and it's already back up to 1,000 or close to it, you know? Tesla always seemed too expensive. Look at it now. Well, I think that all of these feel expensive to me. So look at Apple, and I like all of those big techs. Apple, Amazon, Google. It's like, I feel to me, it seems like the price has more to do with its prominence than it does the company's performance lately. You know what I mean? Which is worth something. Some of them think I could sit down and I could say that it's overvalued, but it's just that I'm trying to know where it's going to go from here. It becomes really complicated. Okay, so GME is falling down again. They're trading about 18 million contracts. Oh no, sorry, GME 6 million contracts. Oh, was I misreading that earlier? 6 million contracts is a lot less than it's been trading. They sort of split again, so Elon Musk becomes the first trillionaire. Oh man, like that was another one that really got me. Like, the stocks splitting, I understand why it has an short-term impact on the price because people can buy it, but it's like that happens, they keep going up. You realize that these people were going to buy it one way or another, and the split was just another excuse for them. You know what I mean? So it's like, this is a person that really somewhere deep down in their psyche, there's some reason that they just really want to own Tesla because they're a geek and they think that it's the future or whatever. Okay, so here we're coming down into our area. We'll see if they blow through this or not. It is slowing there. Another little good push. Yeah. Okay. Let me just put my mouse down here to see if I read that wrong. I read that wrong. Look, they're going to do it. Okay. It is early, but silver is the second most traded ETF behind only SPY. Now, with that said, AG is down 10% since the open. So there's kind of some overnight support areas there. Okay, so GME, there was that initial drop. They didn't break a new low there yet, but they're fighting to hold it. This candle actually ended up being, the tail of it is actually higher. So that's real interesting action. That looks like fighting to me. Let's see if I come in here. Hold on a second. I hate that. Let's look at the book here. Yeah, that's interesting. You are seeing some sell waves come through. Well, so far in the E-mini, it looks like I did the right thing. I think I read that all right, that it was a pretty aggressive move and that there was certainly going to be some technical buyers at the moving average. Is there any risk of me losing my money on Robinhood if they shut down? It is possible for a stockbroker to go under, and then it depends on if you are in a federally insured account. Due to potential market volatility, TradeStation is suspending reduced intraday futures margin rates on silver contracts. All future contracts will be required to have a full maintenance margin. I think that's the right way to do it. You're going to increase this. Is the exchange going to increase the silver future? Okay, so now they're breaking a new low, and you see a little bit of stops there. So when I look through this, do we see like... That's interesting that I can... How far is that as far as it'll let me look down? I guess it is. Huh. How far down is it going? That's down 19% on the day from yesterday's close. They're still in the 250 area. So 250 is kind of where it spent most of its time, right? But it's down about $40-$50. Do you think the end of the hype is why GMA may underperform today, or what? Well, I think that the biggest factor is still that the majority of retail traders can't participate, right? I think that if the retail traders were able to participate here fully, that this would be just like taking off again. Because there's so, like, it's become like a cultural phenomenon. So I think that they would stick to it until they get the real explosion that they want. You know what I mean? By the way, if I go back and okay. So here's the number. Okay, so manufacturing prices 82.1 versus 77.7. Employment 52.6. PMI 58.7 versus an estimated 60. New orders 61, which was less than the previous. Construction spending slightly higher than expected, 1 versus 0.9. So a little bit of a decline there, but it looks to me like they're more reacting to this craziness, that this selling in the S&Ps. Okay, so GME did go lower on that bar, but we got an outside bar there. I would be so annoyed if I would be really upset too. I mean, I think that there's kind of a lot of good arguments on both sides that you can make for this, especially as it pertains to Robinhood, because like the reality is that they can restrict trading in a share, and the reality is that the margin requirements and funding requirements were turned up on them, and so they kind of had to do that. Otherwise, they would be like in a really tough position. But on the other hand, there's a lot of things that Robinhood has done and has always done that, has always kind of made me avoid them as a broker. And this is kind of exactly the sort of situation why. And, they're not as well funded and so on and so forth. So it's not like there weren't things that Robinhood could have done previous to all of this to, avoid the situation, right? So where does that put you? I don't know. Robinhood's a bad broker, that's all I can say. But they weren't the only ones that turned it down, right? It was really only the very best and most cautious guys like Fidelity that actually got in it, right? So the CEO claims he got a $3 billion increase in demand. Yeah, it was a lot. They had to pull a lot of money out of their butt. But it looks like most people are moving over to Fidelity, which, hey, just happens to be the broker that I use. Huh. Imagine that. The funny thing about that is that I didn't know anything about Fidelity. The only reason that I had this account was because Goldman Sachs gifted it to me, and I said, well, if Goldman Sachs uses Fidelity, there must be a good reason why. and that was that. That was that. Turns out that they did know something. Apparently, Fidelity is a privately owned business, and that it is in the charter that it remains privately owned. And apparently they own a lot of GME too, so... Okay, so we did get a pullback. There's a decent Wall Street Journal article from 2018, why free trading on Robinhood isn't really tree. Yeah. So, you know, I actually have mixed feelings about that one too. So there was some instances apparently where Citadel didn't just like front run orders. It was like they knew that a bunch of people had gotten into Robinhood and then like weren't executing the orders from, you know, the retail orders. Which is like, oh, that's not legal. Like they've been fined for doing sketchy stuff before. But really what Citadel is doing, I think that we say that like they're front running our orders. So it's a little bit, that's maybe a gross oversimplification, right? They want the just the data. So like, as a market maker, your whole thing is you're putting liquidity out there, and you're going to want to increase or reduce your liquidity in certain areas based on the market conditions, right? So it's a difference of like, if I'm trading this right now, I could be like that, and I could be out holding liquidity like that, or I could, you know, something changes, and I could, like what happened when I was in this, right? Remember that originally I had it way up here, and then I said, okay, well, there's some momentum on this, and there's that 50-day moving average down below. So I think they're going to go for that. Do you remember that? And so I moved it, okay? Like that's what market makers do. Well, how did I know that? Because I knew that there was a simple moving average down there, and I knew that there is news. Sometimes it's news or, you know, whatever the deal is, right? Well, how does a robot do that kind of a process? It's hard, especially news, because you could get news and then you don't really know what like the actual impact of it is. Like there's these machine learning algorithms that can kind of tell whether a tweet is bullish or bearish, but sometimes they get it wrong. And we have seen, especially when it was Donald Trump tweets, periods where they've gotten it wrong. And I talk about that in the video that I released. Oh, you know what? I didn't post that. Anyways, so how do you as a market maker overcome that limitation and issue? Well, what you do is you just need to have as much data as possible. And one of the best proxies for like, is there informed trading in the market, is the retail traders. So realize that as it pertains to informed trading, retail traders are actually a really large part of that. So they can come in and they can say, oh, hey, like a ton of buy orders are coming into this thing from the retail side, so we need to pull our offers on it, or whatever it is, right? And that's why they want all of that data. So are they front running their orders? Well, they make money, and you have to wonder where that money is coming from. And so it must be coming off of the top of the retail traders' orders. And it's a significant amount of revenue. But at the same time, it's like, yes, but you can put your limit order where you want to, you know? And it's not even necessarily any different than what I do here watching the depth of market, right? Is just that they want it because then they get that depth of market information and market order information, you know, like maybe 50 milliseconds faster, right? If that. No. So we got a new video. Let me post it. Here it is. So if you guys could, if you want to do me a big favor, just open that link that I just posted there into chat in a new tab, and you know, start playing it right now. Maybe, you know, you don't have to actually watch it, but just like mute it or something and give it a like. Because the more people that view that video in the first hour, the better it's going to do. And I spent a lot. I went and looked at it, and I spent like 30 or 40 hours making that video, trying to go back and find the best examples for the kinds of moves that I had planned for. And going and finding what I had done that day and finding the charts and making sure that I understood what the news was. And like I had to search through the news that day and everything because I didn't remember. And I had to go back and watch my videos and see what I was saying about it in my videos on those days. So, and then to edit it, I had to record it multiple times, and then editing it took a while. Like, it took a long time to make. And I believe that I'm sharing some really important information that I think is underutilized by retail traders. There are studies that show that market news has a significant impact on the price of securities. So it's something that I don't think we can ignore. And I go through there and I give you specific examples of I took this trade and this is why I took this trade. And so you can kind of use that, and yeah, you can pin the link. Oh, really? Can you? Let's see here. Pin message. Okay. Anyways, so I think that I would like to make more videos like that, because I think that there is some things that I can teach you guys that would be really, really useful to you without like giving away all of the edge that I have. And this is one of those cases. But you know, it's a lot of work when I do these things because I feel like I have to prove it to you and show you stuff. So yeah, you know, if you like that video, make sure you give it a like and a comment. I was looking for, you know, like what is your favorite news-based move that you've ever seen? So you go into the comments and leave a comment on that thread and get a discussion going. That makes it really fun. I had to go in and like re-upload it because of some issues with the audio too. So, because I wanted to put it out on Sunday. Kind of gives the stream a little bit more momentum if you do it on Sunday. But at least the one time that I did that. Anyway, so I appreciate it very greatly, guys. Thank you so much. Yeah, you could give this video a like too. I guess we're a little under on likes today, but it's because I haven't said anything about it. Oh no, I pinned it. So now in the chat you should see a message pinned up at the top, which is the link. Well, since that touch around 27, it has just been flat. So I'm wondering if you got two big guys kind of expended all their ammo and now they're waiting for one side to puke. Every time that Win puts a clip in there, I'm like, oh, I can't wait until we can actually make clips. Like real clips. I can just like remove that feature of the bot then at that point, I think. No, we'll still keep it because we want to be able to see like when there are certain big moves and stuff. Let's see here. It looks like silver kind of maybe found some support there. And I don't remember what SNBR is. Why do I have that on there? But they're down 5%. And Bed Bath & Beyond is down, and BlackBerry is down. The only one that's not down is AMC. And that's only because AMC was up like 20-30% overnight. Are we ever going to see a bear market again? Seems unlikely. Well, I think it will. It's so... On that, the thing that I question is the length of them. So, like, we just had a bear market, supposedly. I think that we've seen a number of markets that I would consider bear markets, but they never actually reached the percentage for them to say that it was a bear market, you know? So, like, was it really a bear market? Because everybody's looking here at this and we're like, I don't know if that really was a bear market. You know what I mean? Was it bear dip buy? Right. Yeah, exactly. It was just like, but maybe that's just the way that it happens now. Maybe the way that it happens is that the bull runs are really long and extended and the bear runs are really, really short. I mean, I don't know. Or maybe there's something more, what's the word? I don't know, maybe there's something more complicated going on and this saga isn't done yet, and eventually everybody will realize this market is overvalued and will turn back down. I don't know. First big green candle, what are you saying? Do you have money in GME? I have one contract at 250. I have one contract. I have one share I bought at 250. The S&P 500 as the volatility is pretty crazy, isn't it? So when I finally took that short and I got it to run, and oh man, like I got that. When did I get in on that? Where did I get in on that? 41. Oh, that's perfect. Oh my gosh, guys. You see this? Like I literally, oh, it does not get better than that. I literally got in here. That was a terrible arrow. I literally got in here and got out here. Huh? It does not get much better than that. There was quite a bit of luck involved on that sell. Because really what I was doing was I was just saying, okay, like there was a move up and it's doing all of this. They don't fight around like that unless they're worried about something. So I'm going to go short now. I went short and I just happened to catch it right as it was falling apart. Your GME share could make you no, probably not. The way that this is going right now, I'm going to lose money on it, man. It's just not holding very well at all, is it? Look at that. Dupe. Now, dupe. So is somebody new selling it now? Or is this, I'm going to go on Reddit and I'm going to say, it's just a short ladder, guys. Don't worry about it. It's fine. We need to see the volume down here at the bottom. So show volume chart, apply. So look, there was way more volume on that buy candle than there was on anything else. I don't know. I made so much on the first leg of that trade that even if I lost everything that I have in this, I still made money on GME, right? So I'm okay with that. But I just really don't think it's over. I think at some point they're going to, I don't see how the shorts cover while there's no volume in it. And they can't keep the buyers out of GME forever, right? Always full margin trades, otherwise you're not a trader. No, I did the one contract and I made like what, 200 and whatever dollars on it. So if I lose 250, it's like it's fine. Not to mention that some of the other trades that I made around that same time are doing so well that GME is not even like the most important thing to my portfolio. It's pretty good on the stream too. You guys have been giving donations and stuff. We can put that back into the stream. Because I was concerned about, like, I got 2 or 3 things that I really want to do. I need to get a lavalier mic so that, because you guys, we've got to 5,000. So I've got to make the video with the chalkboard now, right? But I need a lavalier microphone for that. I think I need a good lavalier microphone for that. So I need to get that. And that can be like $200, $500, So that's the first thing. And then what was the other thing? There was something else that would really make a difference to our stream. And I don't remember what it was now. Apple has filed a preliminary prospectus for a 6-tranche bond deal. Well, another bond deal? Well, it's interesting that they're doing that, and the Treasury is not, well, yeah. And when was that announced, though? Deal size. That said, it will offer dollar-denominated 5-year, 7 years, 10-year, 20-year, 30-year, and 40-year bonds. Wow. Some of my crypto holdings doubled. Well, I bet. It's really funny how easily, though, they were able to turn this around and say, okay, like GME was a pump, so now let's pump and dump everything. And everybody totally bought into it. And especially the Dogecoin one is the one that like there are some people over in Dogecoin hurting. Man, what was the other thing that I was looking to get? I mean, I was also looking to get a better ring light, but that's more for the that's more for TikTok. SLV plus Dodge short squeeze. Well, I don't understand how anybody says that Dodge is a short squeeze. Like, okay, the whole thing about Dodge is that the supply is so ridiculous. This is why I just don't get, like, okay, guys, if you want to do a pump and dump, why aren't they doing it in garlic coin? Come on. $100 in garlic coin would double the coin right now. Can you imagine if all of the people that had gotten into Dogecoin had instead decided to buy garlic coin? That thing would already be over $1. That one would have generated so much interest off of the rise that would have off of that come on. I mean, obviously I'm only pointing this out because I own a ton of garlic coin, but geez. Guys, don't do SLV. I don't get it, guys. Like, what you put into SLV has no impact on the buys that you already have in GME. I wonder how many people have heard of garlic coin. Probably not very many people. Garlic coin is a meme coin like Dogecoin that was created, and their main selling point was that they had this huge subreddit and tons of people waiting for the drop. But then when the coin was released, they didn't really do the drop very right, or they weren't prepared. And it kind of appears that there was some people that maybe were involved in fraud in starting the coin. So it was definitely like a pump and dump. And then there was some issues with a miner on the network, so they changed the hashing algorithm. And so that was kind of what brought Garlic Coin to where it was. So all of the people that got into Garlic Coin just completely abandoned it, and I kept mining it. So I've mined out a ton of Garlic Coin. But the thing that the idea that they had with Garlic Coin was, well, Dogecoin does really well, but there's not really a very good long term. It keeps, being worth less and less because there's so much supply and there's no tote cap on the supply. Whereas in Garlic Coin, they made it so there's only 69 million Garlic coins that will ever exist, and they've already mined like 75% of them out. So at some point, Garlic coins will become very, very rare, and then we'll see how that actually plays out. Okay, so they have dropped below 250 in GME. What do you think? All the GME situation is done is brought back the penny pump and dumps. Well, I mean, it is a short squeeze, guys. Like, a short squeeze is different than a pump and dump, right? A pump and dump is like you buy it and you convince other people to buy it purely on the fact that it's moving up. A short squeeze, you buy it because there is a large group of traders that you expect to squeeze out of their position. So it's different. Same with silver. I mean, I suppose that what's going on in silver is a pump and dump, but there are actually some pretty good reasons for silver to move too. So this is one I'll wear on silver where you could see a bunch of people get into it and then it die down and then see silver continue moving up and everybody go, whoa, hold up. And then even more interest comes into it. And that's how you kind of get that, you know. Like the way that you get the public interest in it is you do this, you do that, and then everybody forgets about it. And you're like, oh, why didn't I keep watching it? Oh, why didn't I keep watching it? You know? Do you think it's going to go down to 150 before it turns around on GME? I don't know. We'll see again. Well, of course, people, yeah, but that's why I keep saying that people need to understand that what's happening at GME is not a pump and dump, right? See, the problem is that people have convinced the public that execution impact is basically how all trading works, and that's false. There's empirical evidence that I've seen proven by math that suggests that that's not how you make money in the stock market. Without the interference of broker, do you think a short squeeze would have been possible? Well, yeah. I mean, they did squeeze them, right? And they're still going to have to cover at some point. Okay, so GME's seen 12 million shares. It's still on the sell. But yes, they did. But that's the whole thing is that I'm saying because we sold GME with a false justification, which was that market impact is all trading is about, instead of saying this is a good buy opportunity and it's a short squeeze. So then people turned around and said, okay, let's do it around with everything else. And then that gave them the ability to pump and dump. Unfortunate. Normies don't know the difference between a squeeze and a pump and dump. Well, I think a lot of these people do, but certainly the kids buying Dogecoin clearly don't understand it. Like the Dogecoin one is the one that really irks me too, because it's like, did you not look at the chart? Did you not see how Dodge has done this like 6 times now, and it always ends up badly for the buyers? You didn't, look at it and say, yeah, like you're not going to get $1? Come on. Whatever. Well, yeah, GME is really, really taking a beating. So they are below Friday's low too, because Friday's low was 250. But there was the Thursday lows, which were around, actually at one point they got down to 150, but it was really more around 200. So there might be some support around 200 just because of that. But just remember that just because there was support there before doesn't mean that there'll be support there now. Did it get halted? Yep, I just hear it over the news squawk that they halted GME. Okay, so this is a good thing for us to keep an eye on. Here's the zero hedge pointing out. Here's the most shorted stocks going up. And here is the hedge fund VIP stocks. So it looks like this most shorted stocks has moderated and is going sideways. And the hedge fund VIP stocks are rising back up a little bit and recovering. So for now, the correlation isn't as strong. But remember that correlations could go through swings just like everything else. Correlations oscillate like everything else. So, After waking up one day and not being able to trade because of what happened at MF Global, I've always had multiple trading accounts, whether it's a platform that's down or the BS happening at Robinhood. Traders shouldn't be held back from trading because of a broker or a platform. I agree, but you have to have the money. Correlation is no causation. I'm just saying, if you were to take a look at if you come in and you look at this chart here, okay, and you had another indicator here that was correlation, then you'll see something like this. Okay, here's like 1 and 0. 1 means lots of correlation, and 0 means no correlation. So it will probably be something like this. Down, then up, pretty high correlation, it oscillates. So a lot of people have always said, okay, trading correlated assets is a problem because you never know when they're going to stop being correlated. Well, now that I've shown you that it oscillates, I don't think I need to say anything more. Reddit users have historically been the biggest. Well, that is just the same fallacy that people are pointing out, right? Just because it's happened that way in the past doesn't mean that it's going to happen that way this time. Some of those guys on Wall Street Bets are pretty smart. I see. Trade halt current. Did anybody else get halted? Oh, yes, they did. Actually, quite a few today. But GME is the only one halted right now. Cost got halted at one point. Actually, Cost got halted a bunch of times today. This time is different famous last words. This time will be the same as last time are also famous last words. All of these guys that are short, and they held GME from it going from like $2 up to $300 and it blew up their entire funds. What was their justification when they took that trade? That this is the way that it always goes, and this time it will turn out the same way again. And they lost everything. They are both fallacies. What happened in the past has no influence on what is going to happen today. Now, maybe if the same dynamics are there, then it could turn out the same way, yeah. But are the dynamics the same? Clearly, they're not, because we've never had a short squeeze that literally became a cultural phenomenon. Okay? So this time it is different. And what impact that has on the final outcome is difficult to ascertain. I'd also say, like, retail left holding the bag is kind of like, because the issue is that there's two sides holding bags here right now, right? And it looks like there's still a lot of shorts holding bags. So, if those longs cover, they got to buy it at some point. They can wait to get a lower price, sure, but they still have to buy it at some point. But honestly, we really don't know what's going to... Maybe tomorrow, Robinhood says, okay, you can all trade it, and it will be right back up at 500 tomorrow. Like, we don't know. Similarly with silver, another great example. Maybe silver continues to move up from here. Maybe these guys just cover and it dies down. Yeah, I've seen this a million times, but I've also seen many times where it was the same situation and it worked out for them. Ask anybody that was involved in the Volkswagen thing. I remember watching Volkswagen and I said, okay, next recession, keep your eyes out for a short squeeze like that because it'll probably happen again after a recession. Sure enough, it did. Now this one hasn't had like the same kind of squeeze that Volkswagen has when the short's covered, because that was a day where a short just like completely had to bail and it just went crazy. You're betting it's not a 0.00001 anomaly. We're going to look at like short squeezes. After a recession, I think that the probabilities are actually much better. And you already know that it's an outlier. Okay, so they're trading it again. Let's zoom back in here. So after the halt, it is buying back up and trying to make 250. I don't know, man. I laugh because when this whole GME thing started, okay, like Raging Kitty, he's made like $15 million off of this thing. And I have to say, I'm super jealous of him. 2 weeks ago, this YouTube channel had more subscribers than he did, and now he has hundreds of thousands of subscribers. It's insane. And this is just proof of something that I've always said, that the best strategies are not going to be the most popular out there, right? Of course, now that it's open, maybe it won't work as well. But when he first put out his due diligence that there was a short squeeze possible in GME and that the prospects for the stock actually looked good, everybody told him exactly that. You're crazy. You're betting on this huge outlier. It's never going to happen. What is wrong with you? Why would you bet $50,000 on that? You're crazy. And then it moved up and they're like, oh, you got lucky, but you're going to be left holding the bag. And then it kept going up and it kept going up. And all of these people would short it. It'd go up and they say, oh, well, this isn't going to keep going. And they shorted it. And then they just became the fuel on it going higher. Do you not understand? That kind of attitude, like you're sharing with us, Vlad, is the reason why GME has been able to get as high as it has. Does Raging Kitty stream? Apparently he does. He hasn't done it since since like the past week or since he's been exposed or anything. And his streams, by the way, like I went and looked, they were like 6-hour streams. I was like, what? I'm not going to sit and watch a 6-hour video. What is he? He's not like live trading. He's just going to sit and talk about his GME due diligence for 6 hours. Whoa. But that's what he did. He's waiting for the Netflix documentary. Well, and it appears to me. I mean, I didn't sit and watch him for a long time, but I watched his videos, like what his approach was and what tools he was using. And he seems extremely ADHD to me. He cannot go more than a sentence without going on a tangent. Maybe it's not ADHD, maybe it's something else, but he's an interesting fellow. He is a fun guy. It seems I felt like he was probably more interesting or more entertaining to watch than myself, personally. I watched like 3 hours and realized they had like 3 more. Yeah, right? It was like he just streamed that thing the whole day. And isn't that crazy, though, that you have this guy that's betting $50,000 and making millions of dollars, and he was just this guy that was streaming. Only like 100 people ever watched him before that. It was just like, I don't know what the link to his stream is, but his username is Raging Kitty. This is his Reddit username is Deep Effing Value, but his YouTube name is Raging Kitty. So we'll just call him Raging Kitty. He said he shakes an 8-ball and uses Uno cards to make decisions. No. If you actually watch his video, he actually has a good process, right? He has a way of valuing the companies that is really general. Because you could go and you could try and do a real valuation of a company, but it's going to be like specific to every company. He just has a formula that he can perform on every company. And then he can just go into his spreadsheets, pull the data out of Google or whatever. And then he can quickly, scan through a bunch of different stocks to find ones that are undervalued according to his formula. And then, play the situation. He has a good process. He's like deep value. It's a deep value strategy. Now, I think that the downside is that he gave so much specific information about how he did it and everything that people are going to use it, and that's going to make it a lot less useful. And probably a lot of those deep value plays aren't going to be as effective in the future. So just remember that what worked in the past has a tendency to stop working. Isn't that funny? All of these things these plays that something's undervalued and there's a heavy short interest and so you buy into it and it takes off was something that never happened. And the strategy was to just stay short. So that's why all the hedge funds did it. Now it's almost like the exact opposite. And I bet you that it stays the exact opposite for a long time. It will be very difficult for you to make money off of it because everybody will be looking for them. But I think that you'll probably see a lot of things that are like this and will kind of make you feel like you missed out all the time. Know what I mean? Okay, well, we've gotten a couple of pretty good bars on GME since the halt, so... I do have to wonder... So I don't know where the short's coming from. The volume overall from candle to candle looks pretty random. The volume overall in the day is still pretty lackluster, 15 million. I question if we can even get to 50 million shares traded today off of that, right? Yeah. He was sharing his position since 2019. In fact, I remember now that I vaguely recall seeing a thread where they talked about GameStop and thinking, well, maybe that's going to happen, but that's not a gamble that I'm willing to make. Certainly not put $50,000 on it, but he must have a lot of money to spend on it. He's lucky he found this opportunity at the ground floor. He has real smart money. Well, yeah, the thing is that if he continues to put on as large of bets as he has been, I mean, if I was him, I would just be like, I got lucky. I'm going to go back to what I was doing, only making small bets and put most of this away. So hopefully he puts most of it away into an index fund or whatever the deal is and keeps it safe. Instead of going, because if he goes in and he's like, okay, next play, we're going to buy $1 million in option contracts on this big yellow play. And if he does that, he's going to lose it all, right? It was quietly trending on Wall Street Bets for a long time, to be honest. Yeah. I remember reading stuff about GameStop before it took off. And I always ignored them because I always said, well, these momentum chasers, NIO is the best example, right? I think that the NIO thing is just stupid. But it turned out, and by the way, NIO didn't completely fall back either, right? I've been holding silver for over 10 years and almost broke even now. Really? Oh, man. It didn't sell it when it was at 50? I mean, if you made 15 million in a lucky trade, you cash out and retire. Well, I don't think that you retire, but you definitely put a lot of it aside, right? Can you show me how you got the chart on the right side of your Active Trader Pro? what about it do you think is special? So you create the chart, you go charts, new chart, and then you get this chart over here. And then over here in settings, I went and I changed the chart type to a candlestick. I could change the colors, but then I'd have to change it on like every chart, and that would be annoying AF. And I have it show volume chart, show extended hours. That would be good for 1 million. Yeah. Well, I've wondered about this. It's like, okay, so if of course, I am not in the position to make $1 million. I would not have, like, let's say that this silver thing like really takes off. I could maybe stand to make like $1,000. Okay. So if I made $1 million, what would I do with it? And then I'm like, well, I should pay off the house, and then I'll own the house free and clear, and then I can take all of that money and fill it. But then all of a sudden it starts going, and you go, oh wait, actually no, because the return that I could get on that money just from sticking it into the S&P 500 would be worth way more than the interest that I pay on paying off my house. You know what I mean? Well, 1 million wouldn't be enough, no. Is it a ladder attack on GME? It's really hard to tell, to be honest with you, dude. So the issue that I have with the ladder attack argument is that they just say it's going down because there's a thing called a ladder attack that goes on low volume, and but then I sit down and ask myself, okay, what is the empirical evidence that that's what's happening? Because, there can be other reasons why something will move down on low volume. It could just be that there's low volume overall, and that there's a few people selling, but even though the majority are holding, and since there aren't anybody that can really continue buying here, it just kind of slowly goes down, And I can't see how much is like actively trading at a price to see that like they traded a contract here and then pulled their bids and then let it go down and fall down, and it's not really trading anything, they're just pulling. I can't see that. So there's no empirical evidence to prove that it's a ladder attack. Empirical evidence, huh? Here's this, but we do use empirical evidence. I use empirical evidence. By the way, we recovered that whole downturn from the open, but it was very messy. I totally forgot about the storm, even though I have the title as White Monday. I don't think anybody will remember it as White Monday because nothing really happened today, but there wasn't really anything on Silver Friday when I wandered to Googling, but last night on YouTube, Silver was the discussion. The civilians are not aware yet. Should we try a buy? Well, so it's a tough call. Like, if we were asking me this question on Thursday, I would have felt really confident in telling you yes, because that's when I bought. Now that we've had like a gap up and everything, I have to say, I'm not seeing the normies talk about it, but when I got on my Facebook and I read like the other traders and what people were saying on Facebook and everything else, and especially futures trader, they were all just talking about silver. It was all just silver. So where has what are you talking about? Yeah. Wolf of Wall Street guy was talking about, said something about a surprise for GME. I don't know. Don't know what's gonna happen. I would just ignore anything that guy says. I don't think that he's trustworthy in the least bit. He will write this book and make him all out to be like, well, yeah, I did something wrong, but still kind of somehow able to paint himself as a hero that like, hey, look, everybody wants to listen to what I say about success because I was able to become successful. Like the whole movie is kind of telling you to not listen to this guy, right? And then he comes out and he's like, yeah, I'm the Wolf of Wall Street. Like, you know, and people listen to him. Like, what the heck? He was a wolf, but now I think he is a snake, right? Yeah. Well, he was pumping the ragingbull.com guys. I mean, come on. Okay, so you think the silver run is already too late? I'm not saying that it's already too late. I'm just saying that if you have a move and it's like, okay, so silver was down here and it moves like this, and then, you know, there's this sort of a thing. And I can sit down and I can say, okay, like I wanted to buy it anyways, and now Reddit's picking up on it, so I can buy it right here. Then like, great. So that's what I did. But now we are like right here. And so I'm just saying, at that point, you missed the really good entry. So is this sort of thing still possible? It absolutely is, but I can't say with any real certainty how good of a risk reward location buying it just here today is. I do suspect, though, that because of some of the cultural things around gold and silver, that it's probably not done. But that one's not one that we can really the only evidence that I can show you to support that was the last run that we had after 2008 when silver went and hit $50. Okay, so they bought it up a little bit. It recovered a little bit after the halt, and now it's coming back down to 220. Ugh, I don't want to watch it. I'm going to get myself some water because my mouth is dry now. I will be right back, guys. I step away and bots comes in and starts making fun of me already, huh? Well, man, I have to say, I look back on this chart, right? And I'm like, hey, maybe I should have bought it. Maybe I should have bought the S&P. By the way, robot's not doing so hot today. This robot has issues. Oh, actually, you know what? Let's disable him. Did I? Oh, I didn't. These guys shouldn't be that. They should be. Let's disable them. Edit strategy. 8 billion. Turn him back on. Okay, so those two were bad. These two, that's not so bad actually. That's only like one trade, so. But anyways, I look at this and I'm like, oh, maybe I should have bought this. But then when I look at how, difficult of a run it's been, it's like, I'm finding the S&P 500 really difficult to trade here. And I got lucky that I got that big runner on the downside. If the robots keep losing money, we'll end up with bacon color on his Hanes t-shirt. Well, so the funny thing about it, Des, is, well, it's not the funny. I don't think that I can really look at the history anymore on these because we deleted our cache, huh? If I come back and I do real time and historical, yeah, it only shows me. Oh, actually, it shows me the analysis from a long way. Okay. So you can see here today it lost money, but look, like there's been other days since I've been running that one that it's done really well. And the thing is that when it loses money, when it makes money, it makes like 10 times. This one in particular makes like 10 times the amount on its longs than it does on its shorts. So you get these pretty consistent drawdowns and it'll just be boop. But furthermore, the market that we've been in over the past 2 weeks, really since this GME thing started getting all crazy. Oh, you can't see the chart, but yeah. Is not the market that the robots were designed for. So when I designed these robots, what I did was I said, okay, like here's a theory about why the market moves the way that it has been. I'm going to go and I'm going to create an algorithm specifically tailored to take advantage of that. And it worked. It's been working pretty well. Now the market is changing. So then I went in and I said, okay, but now I do need to have these other algorithms that take advantage of a different kind of action. So that's why I created J. And Jay just hasn't been doing his job very well. Jay is the one that I'm, I think that we need to look at him again, because with these ones, Brandon, Indy, Joseph, and Squire, they've all been performing pretty close to what the back test says that they will. There's an issue about the difference between the micro ES and the regular ES, but and so my news squawk is saying like GameStop extends losses down 20, but I'm like, well, okay, but it's not a new low. Anyways, yeah. So, anyways, these ones they might not perform as well on the MES as they do on the ES, but they tend to get the same prices and everything that the back tests say that they do. But J is different. J is different. J is not catching the same trades when I'm running it on sim data that it does in the back tests. So Jimmy is the ultimate store of value. I do think that these guys are going to hold it. Like, until some data point comes out that says that the number of shares short is less than like 10 million or something like that, I think that the buyers in GME are just going to hold it. So at what point do the shorts cover? Right? So here's a scenario for you. Well, the buyers can't really do anything about it. Maybe they try and push GME down. Shorts decide to hang on and think that it will just come all the way back down. And then Robinhood opens up trading again. And everybody unleashes all of their money on GME. And it just goes right back up. And then those shorts are like really like, oh, okay, like we really missed our opportunity. Now it's even worse. We should just bail. And then you get the short squeeze and it goes up to like 1,500 or something like that. Like that's a scenario that's still realistic. GME buyers will hold on and their shorts will end up getting screwed. Yeah. Well, the interesting thing about the whole like buyers holding on scenario though is as we can see here with the low volume, that I think that a lot of retail traders have this assumption that is like, okay, if I want GME to rise $100, I just have to put X $1,000 into it. And or if I put X $1,000 into it, it will move $100 or it will move X percent. And that's simply not the case. It's not linear at all. It follows the square root law. So the larger your orders are, that actually the impact starts to decrease, and the impact of sell orders start to become more powerful, going the other way because of the sign change. So, and furthermore, there can just be situations because the market makers can pull their orders essentially. So they can pull their orders and make it move down, or they can pull their orders and make it move up, right? So short interest as tank, not that much squeeze left, false. The most recent data that we have, and I would not consider that data to be all that accurate, but the most recent data that is available to us as retail traders says that there is still more than 100% of the float. And this meme out there that like the shorts have completely gotten out, I don't know where this is coming from or why they think that or where they're backing it up from, but the empirical evidence that we have at this moment does not support that. But again, the data that we get in retail is not very effective. And the thing is that apparently these kind of like short interest numbers don't really update until like Tuesday or something like that. So we won't even really get a really clear idea of where it's at yet for a while. If that report comes out and then it's like there's only 10 million short shares left, then yeah, I bet that everybody just sells their GME. You bought more silver this morning? Well, I have to say that the run in silver has been quite nice. I thought that it would be a little bit more slow moving at first, but it's been pretty good. What about the data on Yahoo that shows short interest at 250%? Well, so like that's where I'm saying that like this. So right now on, okay, so yeah, they show 226, but that's the shares outstanding. That's not the shares of the float, right? Oh no, wait, that says short percentage of the float, 60. That doesn't make sense. I don't know where that percentage is getting produced from because it is 46 divided by 61. Oh, sorry, I did it the wrong way. 61 divided by 46 is like 1.3%. Or so 130%. That's what it should read. I don't know why this says 226. But that's where I'm kind of like, like I don't care about that percentage number because I'm going to calculate it from the volume. So I want to know how many shares are short. It says 61 million shares short. Okay. Now think about that. Why does that number matter? Why do I care about the volume? Well, because I can come in here and I can look at this and I can be like, okay, so if we assume that Yahoo number is up to date, and I'm pretty sure that it is not, but if we assume that at this moment that 61, or at the beginning of the day, 61 million shares were short, then could they have all covered? No. They would have to be responsible for literally all of the buy volume today, which is just ridiculous, right? So that's where I look at it, and I'm like, okay, people are saying that they covered, but when I look at the volume on Thursday and Friday, the volume was pretty low. Wait, I shouldn't have closed that. Let's come back. Let's go back to that. Finance, Yahoo. Oops, that's not the one I wanted. Oh, well, it's GME. Historical data. Okay, so look at the volume. Since it's basically been shut down, 58, 50, and then 17. Okay, there's no way. I'm sorry, but you cannot cover 60 million. You cannot cover 100% of the daily volume without it moving up price. I'm sorry, you just can't. It's not physically possible. So there's this other thing. So I'm in the silver trade, right? And I just don't get this argument that everybody getting into silver is going to take attention away from GME. I really don't think it does. I like the phrase, you have no empirical evidence to suggest things. I mean, you can call me out too if I say something and we don't have empirical evidence. And I might have to admit that I can only say that like this happened last time, or I can make a logical argument as to why I think it's true, but I might not actually have empirical evidence. The reason why I use that word is because if I turn around and I say to them, like, prove it, or like, when you argue with people like that, it never goes anywhere, right? But if you say, do you have any empirical evidence for that? It immediately shuts them up because they don't. And they know, and like the word empirical has a very clear and very narrow definition. That is evidence that you can see and verify for yourself, right? So this, for instance, the square root volume, right? That the impact is equal to a constant times the square root of the size of the meta order over the total volume for the day. Okay? This is something that has so much empirical evidence that you can go out and find and read from scholarly sources. It's basically unquestionable at this point. The scholarly community, because this is one where it was like, okay, well, we think the market works this way, and then they went and they did all of their observations of the market and they found that it was like this, and it took them a long time to be able to find a model for markets that explained why this is. It was like they knew this for years, but they couldn't come up with a model for it. And then finally they started to make some models for it. And the way that they were able to come up with those models was by modeling the latent liquidity. And then they were able to understand why it does that. Okay. So, right. So I consider that empirical evidence. Right. And once we use that empirical evidence, then we can turn around and we can learn and make a lot of, observations and predictions about the way that things will go. Unfortunately, that is so general that it's pretty difficult for me to use that law to make a prediction about what's going to happen in the next 5 seconds. But it does explain a lot of market behavior when you really get into it, right? Like that's empirical evidence. And the funny thing is that the majority of things that retail traders believe about price action and volume and everything, like directly contradict that law. right? So if we come back to this square root law, and I sit down and I'm like, okay, I want to trade 61 million shares divided by 50 million volume that day times whatever the constant is, and you have to be able to calculate the constant. But if we were to go over like what it's been doing, the constants that I was using, it was like 30 or 40, right? Okay. So what does that mean? That you're going to move it up like $50 or whatever. It's going to be, it's a lot more than that. So I'm just saying the information that we have about markets suggests that there's no way that the shorts are out. Empirical evidence that and $3 will get you a small coffee at Starbucks. Where do you think silver will drop? Oh, I don't know if it'll come back or not. So I find the silver play interesting. I don't think that it's like you can only have one stock with all of the interests, and if anybody puts any money into silver, that detracts from GME and prevents GME from going up. Like, the simple fact of the matter is right now is that the majority of retail traders that want to trade this thing can't. These guys were all on Robinhood accounts, and they're still getting their Fidelity accounts set up, and they can't trade it, and the volume is not there. Right? So if they go and they trade silver, then heck, why not? Like, if they make money on silver, and then that's just more money they can turn around and put into GME, right? You just got, no, you didn't miss anything. I was just answering some questions. Well, you know, you guys are talking about, I wish we'd go back to the E-mini, but I just do not find the E-mini attractive right here. Like, look at this. Like explain this to me. So I would like to know, just from your perspective, okay, what makes you look at this chart and say, oh, I want to buy it? I think I want to buy this. Because I look at that and I say, okay, so first you had this big down move, so that was a trade. Remember what is, so rule number 1 is never risk everything. Never take a trade that could risk you being taken out of the game. That means don't do anything illegal. Don't risk everything. Don't do something that will get you into debt or anything like, or piss your wife off so that she won't let you trade or anything. Okay. That's rule number 1. Okay. Rule number 2, my rule number 2, at least right now, is the first trade is usually the best trade. What was the best trade? Boop. Now look at that. We dropped a good 20, 30 handles. It was really more like 20 handles. Okay. We dropped a good 20 handles in 10 minutes. Okay. Since then, over the course of an hour and 15 minutes, we have recovered that. And what has it done in the meantime? Look at how wide these candles are. You're talking 5 to 10 points on every candle. That is wild and volatile. And yes, if you somehow happened to buy it down in here, then you probably could have held it. But look at how stressful that would have been. So I ask, what about this makes you want to trade it now? Because to me, it seems that what we should be doing is we should distract ourselves from the E-mini as much as possible so that we don't take another trade and lose what we made on it, because the action in the S&P 500 looks terrible to me. That's all. I'm just trying to distract. When the trade was in there, we were in it. Well, don't you think? I was focused. I just wish that I didn't have to lose like 3 times first, but hey, it worked out. It said this enjoying. Oh, listen, I will take the attention where we can get it, I guess. I bet Seth would talk. Well, you remember that we traded the Bitcoin Futures Day was the largest stream we ever had. I think you were there, weren't you, Eric Ages? Clout chaser, I guess. Is that me? I feel like we've been building up a community for a long time to be able to really help traders and help new people really understand markets in an advanced way that is, I think that the majority of retail day traders simply don't understand. And there's a lot of things that retail day traders believe that are just flat out wrong, and I feel like that we were doing it all for this. You know what I mean? Compare the price action in ZN. Yeah, ZN has been pretty difficult today too, isn't it? Let's see here. Joseph is still doing okay on his trade. I think he is going to make money here. Also, since we reset them and got their settings right, the micro J has been making money, but the ESJ hasn't. Hell no, clout chasers don't know what they're talking about. You're doing a great job, man. Really enjoying your shows. Thank you, CJ. I think you've been around before, even before all this craziness too, right? So I appreciate it when it's coming from the long timers, because I totally get why it's so like. There is definitely a thing where futures traders, part of why futures traders will come over to futures is because they don't want to mess with all of that hype and crazy BS, right? I think that a lot of people with futures traders maybe actually get into futures for the wrong reason, because they think, I just want to stare at a chart and make my decisions based off of the chart. And so they think that, well, the futures trading is the best place to do that. And the reality is that there's probably nowhere where you can just stare at a chart and always make money. There's always going to be cycles in your technical indicators that will make them good or bad, if they're an indicator that works. Plan before trade. Absolutely. Generally, the first trade is best, but loved the part, don't anger your wife so she won't let you trade. Right. And I'm sure, I'm telling you what, there was this guy that probably existed, but we haven't met him, that was going to be the greatest trader in the history of ever. And his wife told him no. There was this guy, he was going to be like Raging Kitty, but he was going to make big $1 million plays like that every week. And his wife said, no, we can't risk that much. And it didn't happen. Hey, I got to stop tick GME, AMC, Bitcoin. Huh. It'll be interesting to watch that guy to see if now that he's done that, like what his track record looks like going forward, because it's going to be pretty public, right? Simps won't win. Oh, man. Be quiet. We don't want to, guys, I know that this is YouTube and not Twitch, but you got to be careful saying things like that. Twitch is pretty sensitive too. There's no way that guy would be too socially inept to have a wife. You're probably right. Well, I wonder, does Raging Kitty have a girlfriend? Maybe he does. I mean, he looks like he's an okay looking guy. I don't know too much about what makes a guy look good, or I'll have to go ask my wife. There are some guys, like sometimes I'm on TikTok and I see a guy and like, obviously it's pretty high on the page. So clearly you just ugly people like myself. I don't think I'm ugly, but I think I'm average looking. Usually it's a lot easier to get up there if you're good looking, right? So every once in a while there'll be guys I'm like, oh yeah, that guy is good looking. But this guy, I don't know. I have to ask my wife and see if she likes him or not. She's not gonna like that he has long hair, obviously, but he seems like he's a good guy. Like maybe he has a girlfriend, but he's also kind of a little. He's a little. Yeah. Oh no, wait, he does, because wasn't there like a stream he was talking about kids or something? You are good. Oh, thank you so much. Thanks. What gets me is, we've talked about this before, but the thing that is most stands out to people the most about like my gene pool and my look and my family's look. Like the thing that you would immediately know, oh, you guys are all related, it's the eyes, right? Like I've got pretty big eyes, and the eyelids that go over them are really big too. So if I'm not like looking straight up, you know, when I'm looking down here, my eyelid is covering half my eyes, so it almost makes me look like I am like on drugs or something, you know? And the other thing is that this eye right here, this side of my face is like slightly smaller. This ear is smaller. This eye is maybe a little bit smaller, but it's also like the, or maybe it's this one. I don't remember. Yeah, it's this one where like sometimes I'll develop like a little twitch, and this eyelid just naturally doesn't open up as much. So especially when I'm making TikToks, I'm always thinking about that and trying to fix that. Then in the dark circles under my eyes, oh my gosh. And it's like, it's so funny because I never cared about that sort of stuff. It was like when I was dating, it was like no concern. Like I don't even think that stuff really matters all that much. And I had a system, and I think that it worked pretty well for me, right? And then I get on TikTok, and all of a sudden it's like TikTok very clearly, like it somehow it knows. Somehow it knows. It's like, this guy, like I'm doing the algorithm on his face, and we don't like the way that he looks. So it's like no matter what I do on TikTok, I get 150 views per video, and then that's it. Maybe I did something early on, and the audience that it thinks I'm a part of is like the wrong one, and so that's why it never takes off. It's just Speculator Seth. All of my social medias are just going to be Speculator Seth. So youtube.com/Speculator Seth, twitter.com/Speculator Seth, TikTok/Speculator Seth. That's why when I have the little thing at the beginning of the stream, you know, because I do this because you have to like start the streaming, and then you press the start streaming button, and I immediately start it. But I'm on all of those networks, and you just search for Speculator Seth and you'll find it. So that's why I didn't bother putting any links or any of that sort of stuff, because I don't need to. I know that you'll just go and search for it and you'll find it. You need a hat. So make a thumbnail where your face is mirrored and see what the algorithm. That's a good idea, actually. We could try that. We could try that. Have you thought about Twitch? So I have a Twitch too. We used to stream to both YouTube and Twitch like 2 years ago or whatever it was. And what we found was people kept finding me on YouTube, and people kept chatting in the YouTube chat, and I would hardly get anybody ever find us on Twitch. And when they did, they didn't stick around. And if they ever said anything, they usually said something stupid that I didn't like. So I said, you know what, let's just focus purely on YouTube. And so not only did we just focus on YouTube, but like I tried to re-gear my content more towards the format that YouTube likes rather than the formats that Twitch likes, because YouTube likes a video, like a stream, that you could watch like a regular video. So you want to have something at the beginning. That's why I always try to go straight into this is what's going on, and then here's the charts. That way, if you go back and you watch it on replay, you should make it through at least the first 5 minutes, because you'll be thinking, oh, okay, well, what did Seth think about all of the overnight moves and stuff today, right? Whereas Twitch is all about like every time that somebody subscribes or gives you a message or whatever, having some big emote thing that takes up the whole screen and confetti everywhere. And so that when I respond to you guys, because I know what it's like, right? You know, when I say your name and they're like, oh, they're responding to me, that's great. And especially if I like argue with you and you don't like it, I know how irritating that can be too. And, you know, that's TikTok. And so, or sorry, that's Twitch. And so I said, let's just focus on YouTube. And I think it was the right decision, because even though I've seen some guys on Twitch that get pretty big streams and so forth, I don't think that they do as well as if they were doing YouTube. So, and they seem to like, what is the word, synergize. So like people subscribe for the channel and then they get the stream and then they keep coming in. So we have a really consistent stream audience because of it. So I think I'm doing the right thing, even though a lot of people say like streaming on YouTube actually hurts your channel, but I don't believe that they're correct. I think that they're basing that off of misconceptions. Or when we write a funny comment and you don't even read it, that's fucking irritating too. I know. I get that. I'll get on some of these streams and I'll be like, oh, I want to become this guy's like best friend because they're like my person. And then like you're trying to like get above the noise and you don't read it. So that's something that's been bothering me this whole week, because it used to be that I would get through almost every comment. But these days it's like, you know, I'll get going into something and then I'll come back and look at it and, you know, I'm already seeing it like a completely different set of comments. So I don't know where I was going back. Oh, is Win posting that Yada link now? Thank you so much, Win. She's so helpful. I tell you what, the Yada thing is so great. I did it. I wish I had a way to like show you my phone's screen a little bit better, because, well, can I show you? I didn't, it says that I got average luck this past week, I think. I find Yada, especially when you get a referral and it gives you a ton of tickets, I think it's so much fun. Prior week's results. And, oh no, it's still on this week's results. Okay. Can you see? Maybe if I make it like the full screen, you'll be able to see. So do you see there's one day over here, that's the Yada ball. So on Sunday, you have to, that number has to match with the last number that you have here, right? All of the other ones, they can be mixed up. Okay. So if you get the Yada ball, then it increases substantially. So here I got 3 and the Yada ball. So that's $7. $7 on an account of $60. That's not a bad return, right? but that was because we got a referral from my mom. And so I got the tickets from the referral from my mom. But I'm telling you guys, like, just go and start a Yada account. It's basically a savings account. And then go in and you put $25 on it and use the referral code Speculator Seth. Okay. And we'll both get tickets. And the number of tickets that you get tends to be like around $10. On average is about what I make off of a referral. And it just like scales. So like, that's why I'm putting the referral code. You guys can totally, and if you go in Discord and you're talking to somebody about it and you convince them to do it, you should give them your referral code. I'm totally okay with you doing that. Or you do it on your Facebook. But like once the more referrals you get, like the more tickets you get per referral. So what you should do is you should make a Yada account. Let me focus it back on here. So make the Yada account, put $25 on it, and then turn around and convince all of your family to make it. Like have your wife make one, and have like your parents and your brothers and sisters make one. And then you'll get in and you'll get the tickets from those and you'll make like $10, $20, $30. That's like super easy. And it's for something that everybody should have a savings account. You're getting the best yield on this savings account that you can get, because as you can see, I have $60 in there, clearly making more than 1% per year, right? And you just put it in there for like the rainy day fund. That's where you should put your rainy day fund. And I just love it. And then you see the ball come in every day and you can see what you won. And once you're getting tickets and stuff, for if you put a decent amount of money in there, it's something to check every day. It's fun and it keeps you thinking about saving. So I really like the service a lot. So that's what Yada is all about. Because somebody asked me in Discord, oh, what is this? So that's what that's all about. Do you have a Telegram community? I have a Discord. It's in the video description below. We're like the original trading Discord, I think. Like when we made this one, it was like, hey, I think that Discord would be really good for this, but I can't find anybody else doing this, so let's make one. And then everybody started making them after that because this went so well. Yeah, have you watched the stock guy on Twitch? He had over 60K. Did he really get up to 60K? Really? Well, that's quite amazing. Yeah, and that's where I'm going, like, with the Twitch thing is like, okay, so how many people would have come in if we were on Twitch? But I don't think that I would have gotten it because I've never gotten as many viewers as the stock guy does, right? Like the stock guy was when I first made that switch, because I made that switch around the time that I like ran into him. He was getting like 100, 200 viewers per stream, and I was getting 30 to 50. And I don't know. I do think that you'd tend to get a lot of subscriptions and what is the word, like the bits and all that stuff on Twitch. So maybe he's making money from that. So it doesn't sound like he has a day job. But I'm still happy with my decision to just focus on YouTube. And ultimately, I think that, just watching this YouTube channel get to 5,000 subscribers is like, whoa. Especially with how quickly we got there. Because we went from 3K to 5K really fast. And then this past week, we were getting like 50 subscribers a day. So we basically went from 450 to 5. I think we're at 5. Are we at 5,000 today? I haven't checked today. Let's go look. In the studio. Check the stock of Tesla. Tesla's up 3% today. It's looking okay. But they were all kind of down a little bit. Yeah, we are. We are now at 5,016 subscribers. It's crazy because when you go to some of these channels that have like 100,000 subscribers, it's like they get 500 subscribers every day. It's like, whoa, what? You're done for the day. That last trend was really solid, wasn't it? That one's a little interesting because when you come over and you look at so normally that would be a high R squared move, but because it dipped down so much, it didn't actually get it. It's only just now getting into where it says that there's a significant amount of autocorrelation. If we had a lower time frame, then we would see that. But so are we to VIX targets yet? Is what we should be looking at. Oh, and it looks like Joseph made money overall there on that. So that was the overall accounts today. Well, you take that one out because he doesn't count. So then it ends up being down 400, right? Or down 200. And these guys over here are, I really wish I understood why the micro one gets it and the S one doesn't. Anyways, how frequent it's every week. So they draw a new number every night, and then that's your ticket, and they draw a new number off of your ticket every night. Sunday night is the auto ball, and then on Monday night it starts all over again. So last time I had like 500 tickets. This time I'll have like 100 tickets. Because I got like bonus tickets for going up a level, but it's funny that when I was like, I don't know if I really, because when we did this, I was like, I don't know if I want to mess with the ES. Well, it's gone okay. But look, it's also GME is going okay too. GME is looking not so bad. You think that they'd get back to 300? If they get back above 300, then maybe this could get going. What's the best resources to start for an absolute noob? I'm interested in long-term, boring investment. Tom's Lukens, luckily for you, there is the perfect resource for you. Find the book One Up on Wall Street by Peter Lynch. It will be easy to find it. This is a classic, popular book. One Up on Wall Street by Peter Lynch will give you everything that you really need to know for long-term investing to get started. And from there, it will just be like, what interests me the most? And I'll find a book about that. But that was the place that I would start. I have a video called what are the best trading books, where I kind of go through like the major books that are like to give you a base. So if you want to read books, that's where I would start. What about The Intelligent Investor? I don't think I've read that one. Random Walk Down Wall Street is good too if you are okay with index investing. Yeah. So the books that I go through, they give you a good overview of like all of the different types of market analysis. So you've got psychology and reminiscences of a stock operator, like just trading and psychology of markets is what you read that one for. The technical analysis of stock trends is what you read for your classic technicals. For long-term investing, you read One Up on Wall Street by Peter Lynch. And then for volume profile, you're going to want to read Mind Over Markets. That's a very important way of reading futures. We use a volume profile. Well, that's market profile and volume profile are a little bit different, but they basically, people try and use them the same way. And then there is... what was the last one? Oh, and then I would recommend the No BS day trading course, which is only like $70, $80. And it gives you a really good insight into how the order book tends to move around and what kind of the game is in there. This could get going. I've never seen such delusional optimism. Well, I said that they would need to get above 300 first, right? But I'm just saying if the bulls are able to sustain a trend above 300, then you might get something. Mary Cages is just always trolling me anyways. I know he's like that. It's fine. Okay, so it is time for me to get going, guys. I will post it here again. I mean, it's in the pinned comment, but I'm going to post it again. Here's the YouTube video that I put out today. It was going to be out on Sunday, but I put it out today, and it is how to trade the news. I go through specific examples from the past year or two where I have made trades both on sim and live. I think I show you 3 live trades in that. So you can look at how I tend to look at news. That's not everything that there is to know about news, but that is like the getting started if you want to even try and look at the sorts of things you want to look for. What's your take on silver? I think that I was looking to buy silver anyways, and Reddit jumping on is a good thing. Because everybody's jumped on, there might be a little bit of a pullback first, but overall, I think that we're doing okay on the upside. Whoa. Okay, so that little spike right there was probably a over-the-counter trade. That probably didn't actually touch 300. It was just an over-the-counter trade that was reported late. So if you want to talk to me, you can email me or you can message me on Discord. That's how you can find me. Or you can just ask a question on a video in the comments. I wouldn't say that GME is dead. It's just like the retail traders can't trade it right now. So that situation's not going to last forever. So let's just see how it works out. I think that there are still interesting twists and turns in GameStop to come. I mean, probably with the number of shorts that are out there, probably the company itself is going to have to do something to be able to resolve this situation. So I think that we just see what happens. And don't risk anything that you can't afford to lose. Okay, guys. I will see you guys tomorrow. Make sure you watch that video I just linked. And in the meantime, stay profitable, friends.